Alrighty, well, one of the things we like here at the Ben Shapiro Show is Birch Gold. They're one of our biggest sponsors, obviously. And we talk with them every so often about the state of the economy. Joining us on the line right now is Phillip Patrick, a precious metal specialist from Birch Gold. So, Phillip, let's talk about the state of the economy. I mean, right now, Joe Biden is claiming we have strong economic growth. Inflation is coming under control. How do you see it?
Yeah, I mean, look, you can cherry pick the numbers and certainly make that argument, but I think it's a mistake to focus just on economic growth. The real question, I think, is how is the economy working for most Americans? And the numbers really don't look good over the last 2.5 years. Look at food prices at home up 20%, electricity up 21%, gasoline prices up 72%. Let's look at people's biggest expense, right? Housing, rent payments rose 25%, median mortgage payments up 85%. And very importantly, wage growth has trailed inflation consistently. In other words, it's not just our imagination. Virtually every essential is more expensive today than it was before Biden got in office, and wages just haven't kept up, right? Consumer debt has recently hit an all-time high, over $1 trillion for the first time. So I think people are desperately trying to maintain their living standards in the face of Bidenomics, and I think that's the reality for most Americans today, despite how we try and dress up the numbers.
So, Phillip, one of the things that they're claiming now is that they've brought inflation under control. The Federal Reserve obviously has increased interest rates to sky-high rates. This is why mortgages are now clocking in at 7-8%. Now, the reality is that by historical averages, the interest rates aren't actually all that high at this point, but also the inflation rate is not all that low at this point. There's a lot of talk right now about the inflation rate being under control, but they usually target 2%. It's well in excess of 3% still, so it's still 50% too high, but they're still claiming now that maybe they're going to stop with the increases in the interest rate.
Yeah, look, lower inflation generally is good news, right? But there's a couple of points to remember. First of all, inflation is cumulative, right? A 10% inflation rate one year followed by 5% next means that everything costs 15% more. So easing inflation doesn't mean a return of purchasing power. It's just destroying it more slowly. Now, the other side of things, which I think is very important, is the Fed's preferred measure of inflation, which is core PC, personal consumption expenditures. They've been more than double, as you mentioned, the 2% target for years now. The only thing that's really been driving that headline inflation number down has been energy prices. And of course, they're starting to creep up again. Oil hit $90 a barrel just a few days ago. It's particularly concerning because I think what it's showing us now that is inflation is becoming entrenched in the economy. And I think, this 2% target that the Fed have may be a pipe dream for the foreseeable future. It's proving particularly sticky at the moment.
Now, Phillip, one of the things that's become patently obvious really since 2007, 2008 is how much power the central bankers have over the economy. Now, there used to be a time, it was now decades ago, where legislatures really had sort of the chief control over the economy, and you could hold them responsible if the policies were bad. There was still an interest in some level of fiscal discipline because you couldn't just print dollars willy-nilly and then pump them into the economy or blow the debt off for a couple of generations. Obviously, that's not true anymore, and that means that the central bankers have been given this extraordinary power to control how much your dollars are worth, particularly the ones you've already paid taxes on and that are in the bank already.
Yeah, I mean, it's absurd. The power that the Federal Reserve have is really showing itself in today's economy. And the reality is, as you mentioned, they're an unelected body. We really can't hold them accountable. And this Federal Reserve has a problem as well. The tools that they have available, I think, are very limited. Their ability to raise rates significantly enough to crush inflation is limited. Look at what they did to the banks earlier this year. Their ability to fix the economy by lowering rates and stimulating, also very limited as well. So they've got their hands tied behind their back. But I agree with you. The Fed as a body, the power that they have over the economy is concerning when they're unelected and unaccountable.
We're speaking with Phillip Patrick. He's a precious metal specialist and a spokesman for Birch Gold Group. So, Phillip, I get the question all the time that in a really sort of uneasy economy like this, and it really is uneasy, no one knows, obviously, where to put their money. It looks to me like the real estate market is going to have some sort of sell-off here just because the mortgage rates are so high. There's a lot of stickiness because people don't actually want to sell their homes because then they'll have to take a new mortgage that isn't going to be at 2.5%. It's going to be at 7%. But at some point, people will lose their jobs. They'll lose their savings. Then they're going to have to sell those houses. The same thing is happening in commercial real estate. I've been talking with people in commercial real estate, and the occupancy rates are dropping fairly rapidly at this point. And that means the underlying value is really going down. The Wall Street Journal has widely reported this. Meanwhile, when it comes to the stock market, a lot of uneasiness there. New IPOs are doing a fraction of what they were doing just a couple of years ago. And meanwhile, if you put your money into a money market account, you might be earning the best return. It's a very confusing economy. Now, obviously, you have a vested interest. You're with Birch Gold. But what do you recommend in terms of things like precious metals as a hedge against all of this?
Look, I think precious metals work very, very well in climates like this simply because of the nature of our problems, right? We have inflation, which we've mentioned. We have potential recession on the horizon. Tied into that, I think we have issues with our currency longer term. The world seems to be, at least for now, distancing from the dollar. These things, of course, very negative in isolation, but very positive drivers for safe haven commodities like gold and silver. So the climate's really good. And as you mentioned, the options out there at the moment are very limited. So precious metals make a ton of sense in climates like this.
Phillip Patrick, precious metal specialist spokesman for Birch Gold Group. Really appreciate the time, folks. If you do want to get involved with Birch Gold, we've talked about them a lot on the show. They're a sponsor of the program. Birch Gold will make sure that you have all of your questions answered. You can text Ben to 989898. They'll get you a free information kit on gold. They've got that A+ rating with the Better Business Bureaus. Thousands of happy customers. I've trusted Birch Gold myself when I diversify into gold. So go check them out right now by texting Ben to 989898. Phillip, really appreciate the time.
Thank you. Same.